What's up, everybody? Welcome back to RoyalBluFX. In today's video, we're going to talk about structure and structure alone. That's it in this video, okay? We're going to go over some of the things in terms of how structure is established in the market. In this video specifically, we're going to really just go over structure and nothing more and nothing else, okay? And the reason for that is because I really want to show each and every one of you out there that structure is king. Structure is king above all. If you're ever confused or stuck or just don't know where the markets are going, always rely on structure. All right, so this is just a video of showing you how I exactly map out structure. And some of you may have a different way of mapping out structure, but this is my way of mapping out structure. All right, another thing I want to talk to you about is how to adapt to structure, okay? So just because when we see a break of structure, right, happening in the market and price doesn't come back or retrace back to our area of demand or supply, right, we can always adapt to structure, and that's what we're going to talk about in this video as well, so stay tuned. All right, guys, so in this video I'm going to show you guys how to identify structure correctly in the market. I'm going to also show you the 3 ways I identify structure, and also I'm going to also show you how to adapt to the markets with structure, okay? I just want you guys to remember that structure is king above all, nothing more, nothing less, all right? So let's begin. All right, so as we're here on GBP/USD, it doesn't really matter what market we're in. I'm going to show you guys how to identify structure. Now, most of you guys have probably seen other various videos of how people identify structure, you know, and normally this is what I don't really like, okay, is when structure is being identified so simply like this, right, and you're seeing, okay, there's a low, there's a high, there's a low, there's a high, there's a low, there's a high, and so forth and so on, right? Like, everybody understands this formation, right? Everyone's like, okay, I can see that clear, right? But what's funny is the market doesn't work this clean, right? It doesn't work this way, right? And so I really want to break it down to you guys on this next drawing here to show you how structure really works, okay? So let's go from the top. We're going to go from the top to from the top to the bottom, and from the bottom to the top, okay? So we're going to start from the highs, okay? I'm just going to show you how it works. All right, and bear with me here. Okay, so here's what structure looks like, okay? Almost a realistic way of what structure looks like, okay? So normally when price is pushing to the downside, you can see how every time when price breaks a low or a high in this low in this case, right? When price breaks a low, that's indicating us that price is pushing bearish. It's still looking to go bearish, right? So anything that was prior or previous to the upside right here, structure like this, and price hasn't come to mitigate it, right, you can avoid this this high, right? You can now adapt to the new low. So far, this is the new low right here, okay? So when price breaks structure, we're anticipating as traders to wait for prices to come back to an area of supply, in this case, right, because price is going bearish. If price doesn't meet right to the area of supply, right, to the zone of supply, then what we need to do, again, is adapt, or just wait patiently for price to break another low, right? Here, there's another low, another low that was broken, right? So we would wait patiently for price to get up to the area of supply. Right? So price didn't come up there, right? Price broke another low, and it continued bearish from this point on, right? Price went retraced back, price broke another low like this. What happened? We had another break of structure. So now we need to wait patiently and adapt to this new low, right? And price then retraces here, right? Now we're ready, and now we're waiting for that change of character, and then we're looking to sell off the market, right? So here's the funny part, okay? Here's the funny and interesting part about structure, okay? So you'll be asking, well, why doesn't price come and mitigate, right? Like, the whole point of structure for a break of structure is to come and mitigate that previous high, like this, right? Well, here's an interesting fact. Markets don't need to come back up or retrace and or mitigate right there and right there or right then, whenever you're wanting the market to come back and retrace, right? The markets come back whenever they want to, whenever they please to do so, right? all we do as traders is we wait for that solid break of structure and anticipate and wait for prices to retrace back to an area of supply, right? Or in this other case here, in demand, okay? So what we do is we react to the market. We don't tell the market where the market's going to go. We don't predict where the market's going to go. We just anticipate, wait patiently for those areas to come back for price to come and mitigate. And if it doesn't, we then need to start adapting to the market, okay? And this is only if you want to be able to catch more trades in the market, right? To have more high probable trades and chances of able to be taken, sells and or buys in the market, okay? So notice what happens here. Prices start to retrace, okay? We had another break of structure here. Price then breaks this previous high, okay? If you see here, I'm going to map out the structure for you. Let me just take this all out. And you can see here, let me replace this here. Okay, you can see that we had a high and a low, a high and a low, a high and a low, right? Back and forth, just like this, nice and easy. You can see the structural points, right? We see that we were bearish this whole time, but then all of a sudden you have this push, this move pushing up all the way high above this high, right? Now, obviously, that's structure change. We're changing, the structure is changing and telling us that there is a possibility that price will reverse. Price will push back to the upside, right? So you might be wondering, well, okay, price pushed up, then why didn't it respect this this high here? Good question. You might ask. If you see just above us, right over here, this is what's called liquidity, okay? Like every high and low in the market, there's always going to be liquidity, okay? Now, the reason why, obviously, you don't see when prices are retracing right over here in these little areas, I mean, you can probably see a little bit of liquidity here, like this is liquidity or inducement in the market, and price comes, and then taps the supply and then pushes bearish, right? But the reason why prices are retracing is because they're going after liquidity. Every high and low that prices are making, there's internal liquidity in the market. So what do I mean by that? Okay, so whenever there's a break of structure like this, let me just delete all this. Excuse me. Do this, do this, do this. Okay, every high-low that you see in the markets, there's always going to be liquidity because we know liquidity is what fuels the market. So when there's a break of structure like this, we are waiting for liquidity to build, like so here, okay, and then wait for prices to come up to an area of supply like this. Once that liquidity was made, we need to wait patiently for price to come and take all this liquidity, tap that high, and then push prices to the downside, okay? If prices didn't do that, then we can start adapting to that new low. Right now, why do we adapt to the new lows or new highs in this case up here? Right, it's because if you wanted to have more chances to take a trade in the market, we can do that, right? Because we see anytime price makes a new low, it's giving us a somewhat guarantee that prices should continue in that intended direction. Prices should keep going in that direction. So prices that are doing that, right? When prices are breaking structure here, they're doing that. Now, we need to wait for liquidity create, right? We know where that high is. We're going to wait patiently for price to get up there, and it hasn't, right? Yet. So we keep adapting to the market. Price break structure, right? Here we go. Sell off, right? Prices created liquidity in here, internal liquidity, sells off, right? Now, when prices are pushing bullish like this, again, what you might be asking, what is it doing? Why is it retracing, pushing bullish, and then breaking the structure? Well, you need to be really aware of structure and liquidity. Now, we're playing the major structure, essentially. Okay. Now, when prices are doing that, right, retracing, prices are tagging or touching our latest supply right there. I need to move this a bit. Hold on a second. There we go. Okay. Right? So prices are tapping supply, taking out liquidity first of all, tapping that zone of supply, and then pushing bearish. Okay? So what we're dealing with here is we're dealing with microstructure, substructure, and major structure. Okay? And I'm going to show you how to identify that structure in the market. Okay? So right now you're seeing that major structure is being tapped and pushing bearish, right? And this is how prices or structure compounds, okay? I always like to say that structure is compounding, okay? There's always a bigger fish coming to eat another bigger fish, and another bigger fish coming to eat another bigger fish. Always picture it that way, okay? Of course, in order to see the major structure, okay, we always need to be on the higher time frames in order to see what that substructure or that minor structure and then microstructure is, where it is exactly within the major structure, okay? So the major structures you see mitigated here, took out liquidity, pushed bearish, right? Now, once price is pushing bearish here, notice what's happening. We got more structure, right? And our objective would be to hit this low here and be finished, right? We can now adapt to structure pushing bearish here, okay? We know the natural intention of the major structures move here. We know the intention is to break, and then the intention is to retrace all the way back and then mitigate here and then look for a sell-off from this area, from this zone, right? But as the major structure has mitigated, we can now start trading the minor structure, which is essentially our substructure and minor structure in the market, which we're going to go and talk about that in a few minutes after this, okay? But pay close attention to here because I really want you guys to see what I'm doing here, okay? So once the substructure starts changing, substructure is pushing bearish, right? You can see it right there. Prices haven't mitigated at all, right? So then we go ahead and adapt to this new break of structure, okay? We're going to wait patiently for this high to be mitigated and then potentially for price to fall bearish, right? You can see there's a low and a high here. Now there's a low, there's a high, there's a low, there's a high, right? Just like this. You can see prices are bearish on the substructure and minor structure, right? We're just waiting now for prices to come and mitigate. If this hasn't happened, then what do? Well, we need to wait for prices to confirm. We're looking for confirmation on the lower time frames. We're looking for a chalk, a change of character, right? If that hasn't happened and prices push bullish like this, well, good. Now we know what happened here. We see that this high was taken out, right, by this high here, okay? And now we can start by showing our lows and highs like this. Now we know that minor structure is taking over substructure. Okay, we can see that prices have broken bullish. Okay, who was responsible for this break? It was this low right here. You can see that there's a low and a high here, but this is the low that was able and responsible of this break here. Now we have what's called a flip zone right over here. Okay, a flip, and then prices are pushing bullish. Okay, now once we have this break of structure again, you can see, actually let's retrace all the way back to this one. You can see when that break of structure happened here, we're just following and waiting patiently for price to come back and retrace, wait for that confirmation, wait for a chalk, right? And then we look for that buy, okay, for that continuation to the upside. All right, there's another break of structure here, right? Now we wait and anticipate for price to come back here. If prices didn't come all the way here, we can now adapt to the market, right? Prices are pushing bullish like this. Now we have to ask ourselves, what is price trying to do here? Is it pushing bullish still? What is it doing, right? Is it trying to go and mitigate this high here? If it is, we need to wait for prices to push bearish like this, right? But here's the interesting thing, okay? When prices are starting to change bullish from a bullish perspective now, right? We need to adapt to the market and now look for more buys if price haven't yet come to this area of demand, okay? This will be, if you're looking for buys here for the continuation, this is a continuation of this push that's happening, this major push, pushing bullish like this. So what we would do is wait for that first break of structure. There's probably a chalk that's happening here. Price came and mitigated, then price pushed bullish again. Now this is another confirmation. Normally, I wait for 2 breaks of structure to confirm that price is pushing in the intended direction. So in this case, we're picturing here that this will be 1 break of structure that we can't see yet. There will be a second break of structure here. Then this is what will confirm to me that I'm looking for buys here now. I'm actually looking to buy long here and stay in the market, right? And so therefore prices will come and mitigate and push to the upside. So it's very easy to identify structure just as long as you don't confuse yourself, okay? What I really want you guys to know and always focus on is every time you're confused about where structure is going or where the market's going, start with identifying your structure mapping, okay? and structure mapping is essentially just putting your your dots like this and finding where your highs and lows are. Where's your highs and lows? Where are those breaks of structures happening in the markets? Once those happen, just wait patiently for prices to retrace. Okay, so let's go on a live. I want to go on a live chart right now to show you guys exactly how to really start identifying this correctly, and you're going to start seeing me really showing you guys examples of how this works. Okay, so let's just go here on the 4 hour. Let's go press the replay button, and we're going to go at it right over here. Right. All right. So we're on the 4 hour right here. If this works. All right, sorry guys, that was weird. My computer froze for a little bit. Okay, so we're on the 4 hour here. Okay, now we're going to start identifying structure. All right, we're going to do this. We're going to mark our highs and our extreme lows like this. Okay, so we know this is our major structure going up, major structure going down. Right now we have within the major structure we have what's called substructure and minor structure. Okay, you can also see that the right there actually. This is our substructure. Substructure pushed bearish right here, right? Notice how price this low here, this low here, didn't retrace all the way back up to this high yet, okay? But it actually broke a new low. So what do we do here? Well, we do what's called adapting to the market, right? So this would be your adapting right here. You would wait for price to retrace, obviously, and then wait for price to mitigate. Once prices mitigate on your higher time chart, right? You're gonna wait. You're gonna go down like this, and now wait for prices to, for structure to essentially shift going bearish. How do we know that price is shifting bearish? Well, you can do this again. Mapping out structure. There's your high. There's your low. There's your high. Right. Low. High. Low. High. Right there. Right. We got the microstructure like this, okay? So notice that we have a low here, okay, and then a high here, another low, and then another high. You can see here's that structure. This is the low right over here where price broke. It broke the substructure, right? So now what we do is once price is broken, we can do this. All right, now this gives us the intention that price is pushing bearish. Now, how do we identify structure going bearish now? All right, we can see that there's a high and that there's a low here, right? Our expectation really is to wait for this low to go. Why? Because this is the clearest and cleanest low that I see that's visible right now, right? Some of you guys may go actually right in here, see to yourselves that there's a high, there's a low, right? You can play these highs and lows as much as you want like this, right? This is our microstructure, okay, or macro structure. Anybody, you can call it macro or micro. It doesn't really matter as long as you can identify structure, right? But this is, we can see there's a high, there's a low, there's a high, there's a low, there's a high, there's a low, and there's a high, right? So you can take the macro structure here. Once price mitigates, you can see that prices have broken a high here. That's giving us a first sign of a chalk right there, like this. And then now you can wait for prices to come and break here. You can see very clearly, it's very tiny, but there's a break of structure. This would be our type 2 structure. Okay, there we go. We have a clean chalk of the highs. Prices taking out liquidity. Prices break below like this. You can see that that break happened by a wick, by a hair, right? And once that has happened, prices retraced all the way back up to that high here. And obviously, this is where you could have been able to take a sell if you wish to do so, right? Like this. And you could have sold off from this high, pushing bearish. Now, obviously, we're seeing that prices are continuing bearish. You can see that there's a high. Now there's a low. There's a high, okay? Right there. What are we doing? We're waiting for prices to break structure. Prices have broken structure. Look where it's coming back. Somewhere in here, above this high here, above these two indecisional candles right here. Excuse me. And this is forming liquidity in the markets like this. Okay? Forms liquidity. Prices came and mitigated whatever is in here that we can't see. Prices went bearish, right? Let's continue here. Okay? So now what we do is we wait for another break of structure. Price is broken, okay? And then now you can see where your highs and your lows are. There's a high, there's a low. There's your high, there's your low, okay? Pure and simple as that. Now, the interesting part of this is sometimes price, right? You would wait for a supply like this. Sometimes price would come in, take out a high. Okay. Notice how it's not a perfect high, right? Because nothing is perfect in the market. We can always anticipate and wait for prices to get to certain areas, right? Once prices get to this high, this can be looked at as inducement in the markets, liquidity in the markets, whatever, and then prices will go bearish. Just as long as you know where your highs and your lows are, that's where markets are going to go, right? They're going to always go deep. They're always going to pull deep back and retrace back to its supply or demand areas, just like this. Now, the question is price, since we can't see what's inside this wick, prices can obviously come above this high here, mitigate whatever is in this wick, whatever that order block is, and then take it and call this as inducement or liquidity, and then push price to the downside, okay? So once you identify your structure, and this is why I say structure is king, because price is always going to come back to those highs and lows. You need to be patient for those highs and lows to come back to, for the markets to come back to, right? Again, we have a high, we have a high, and then we have another low, right? Notice how prices push so bullish like this, right? And again, prices come out and take out more liquidity, right? But at the same time, we're still bearish here, right? Also, if I zoom out, I want you to see that we're playing the minor structure and substructure levels now, okay, within our major structure, So whenever minor structure is broken like this, if I can make this a little more clear, whenever minor structure is broken or substructure is broken, we need to have the intention of looking that price is going to retrace all the way back up to the origin of that move. Okay, the origin starts from this wick right here. Okay, sorry, not wick, this order block right there. More importantly, since this order block was mitigated, we can come and adapt to this wick over here. This is the wick that has left that has been left unmitigated. As you can see, nothing was tapped except this little area here. Let me just move this maybe to make it a little more clear for you guys. Right here. All right. Right here, you can see how we've just tapped the surface, but we haven't really gone into the 50% equilibrium of this wick. If I do this, right, notice how this entire wick went right inside the 50% equilibrium, right? And it did so, and it mitigated everything, and now it's pushing bearish. Now, this is a method that I like to always use and understand. Whenever minor structure or substructure is breaking, I always like to utilize the origin of that move, which is that high right there that you see. Okay, and once I identify that high, then I would like to use my 50% equilibrium. Identify my 50% equilibrium line, and then wait for prices to get there, and then I'd wait for prices to then I wait either to snipe at it like this, right? And then hold prices, and then hold the trade to go all the way bearish like this, and hit this low here. Okay, just like that. And then another thing I could do is wait for prices to break, to show me some more bearish momentum like this. Let's identify structure here. Okay, see that there's a low, that there's a high now, right? The prices are now switching. There's a high, there's a low, right? High, low, high, right? Look what's happening here. Very easy to see here. You can see that prices wicked just above this high here, took out whatever the liquidity here, price broke bearish, right? Notice that this high just barely broke above, right? But prices are now going bearish. They're showing us bearish intention. They're showing us that there's a low here that was broken, right here. This is our micro, okay? Micro structure was broken from right here. We can call this a chalk as well. Prices retrace back to this high, right? And then, of course, go just a little bit higher just to take more liquidity wherever you see more liquidity, like right there. Okay, like that. Like that. And then the price continue going bearish, right? Let's look for another high and another low here. We can see there's a low, there's a high, there's a low, and there's a high here. Okay, so you can also see here clearly We're still waiting for structure to shift. You could take a sell here, maybe leave a risk right above the zone here, which is a very healthy way to look for trades, or at least to have a setup for your trade. You can wait for this break of structure. Now again, you can see that we had microstructure breaking. There's your micro break, right? We're expecting for prices to come up at this high. You would wait for prices to come in. There you go, right? So you can see there the micro was touched. There's your last up candle right here. More importantly, you can see prices at this wick here that was unmitigated. This must have been a flip zone right here. You can see prices went down, went up, and then flipped. And this is where your next structure is, okay? So let's map this out. There's a high, there's a low, there's another high, there's a low, okay? Excuse me. There was your high, and then there was your low, there was your high. This is not a low, but you can just put it in there because it's a high and a low, but it's not your official high and low. There's your high, there's your low, okay? Here's your high, here's your low, okay? Right there, here's your other low, right? Here's your high, and so forth and so on. You can just see it, you can see it even if we pan out like this, right? And then prices still continue bearish like this, okay? So it's just identifying your structure, guys, being very meticulous and very careful about identifying how structure works, and then everything will be gravy from here, okay? So let's play this out, okay? I want to go show you guys how to adapt to the markets now. Notice how we had a break of structure here. Now this is a very ugly break of structure because we had this huge wick, right? And then price just came down. Essentially, this is your break of structure. You can see it here from the wick right here. The way I identify breaks of structures, actually more importantly, the way I identify order blocks is when prices are engulfing, when the market is engulfing a previous candle, okay? You can see here prices, this candle engulfed whatever was in here. So this would be my area of interest, okay? And I would look to set a supply area here, a zone like this, and wait for price to come and tap. Once prices come and tap there, I would drop down to the lower time frame and now start. Now prices haven't really mitigated that well. I'm going to wait for prices to mitigate, and if they haven't touched that supply zone, then there's no way for me to be being interested in looking for sells yet. Excuse me. Obviously here you can see that we did have a solid break of structure right there, right? Now this is a confirmation. We see that we have a chalk from the high, right? From the high there and then to the low here. Let's identify structure here properly. There's a high, there's a low, there's a high, there's a low, there's a high. I'm sorry, there's a low, there's a high, there's a low, and there's a high there, okay? So notice how we had that break of structure here, okay? Now this is the most important thing, is to now wait for prices to come back, right? And the reason why we're waiting for price to come back is because this is where we're looking for the cleanest trade or the cleanest sell-off, right? You can see that we have a huge zone here, which I'm not particularly happy about, but when that happens, I usually mark my 50% equilibrium like this, right? Get about a 0.5% risk entry on this. It's not good right there. It's right there, right? I could either sell off from the opening, from the open here of this low where the discount area is, or I can sell it from the premium. Now the premiums are the best, obviously, for whenever you're selling. But notice what's happening now. We're having another break of structure. This is our type 2 breaks of structure. Okay, we can either wait patiently for this one to come here, or we can just adapt to this area to sell, right? To sell from. Notice what's happening. We got taken out from there. We have that high, that low, that high, that low. Now there's no selling opportunities, obviously. Price just blew right through our supply zone here. We can delete this out. And to some of you guys may be asking, well, aren't we still looking for sells? Yes and no, because what's happening clearly here is we had a break of structure pushing to the upside now. We need to wait for another sign now for prices to go bearish here. We need for this structure here to start going bearish, okay? You can see we have a low, we have a high, we have a low, high, low. Okay, price is still bullish. Okay, so there's no any chance for us to even get in the market here. So we just saved ourselves from actually taking a sell that shouldn't have been taken, right? Even though we identified our zone correctly, we had no selling opportunities. Okay, some of us are actually we rush into the process of actually looking to sell right off from here like this, right? As soon as price comes to the supply, and then we just look to sell off, right? And then you're questioning yourself. You're wondering, why didn't price go down? Price is still bearish. Well, yeah, but make sure you understand how structure is working on lower time frames, our minor and substructure and minor structure, right? That's why you can avoid yourself from actually getting stomped out, or whatever you want to call it, from the markets. Okay, so let's zoom out this a bit. Okay, you can see that we're still relatively on our high here. We haven't gone bullish just yet. If prices take out this high here, then I'm for a fact all game looking for buys, right? But in this point, I'm going to see what prices are doing right between this range. We have this high and this low here. So I'm going to wait for prices to give me some sort of answer. There we go. There's our answer. There's a break of structure. Now we can start shifting our minds of thinking, okay, well, we're looking for buys now. Okay, so if we go to the 4 hour, okay, you can still see we're relatively still a sell on the 4 hour. We haven't really pushed bullish on a major time frame structure, right? You can see that we have an extreme high here. So what we can anticipate is looking for buys and looking for sells. Okay, why? Because our internal structure here has said to us that price has broken our previous high, which was right. Which was right here, right? That's our previous high. So since our previous high is telling us the price is broken structure, we're going to be looking for buys, and we're going to also look for some sells, right? So sells and then buys, okay? So what we can see here is right here, more importantly, this area, I believe right there, that would be our order block, okay? We're going to wait for prices to get there. If prices don't reach up there at that point, then we can we'll look for our potential buys. So there's our supply there. Let's mark out our demand area here. Okay, we can see this interesting zone here. Price may come a little lower to tap this area of supply as well, so we'll pay attention to this. Okay, and now we're going to wait to see what price does. Now, at this point, since we know we're looking for buys, okay, we know that price may not reach this demand zone. Excuse me. Let me put this demand zone in a blue so we don't have to confuse ourselves. There we go. All right, and then I can't even see what's happening here. Forgive me. Here we go. I still can't see what's going on here. Excuse me, guys. Here we go. There we go. Okay. Okay, we don't want to confuse ourselves. So what we're looking at here is we're looking to see what the reaction of this area is going to do, right? We can see that there's a consolidation happening here. Okay, consolidation. Okay, and so what we're waiting for is for a break from the highs or to the lows. Okay, in order to decipher whether we should adapt to the market or whether we should wait for price to come here to the demand area, tap it, and then buy. Or when I say adapting, I mean by a break above like this. Once a break above has happened, you can see that there's another break of structure. We can look for a sell, and then we can look for a potential buy, right? Or we can look for a sell from this high here, look to potentially target this low, and target this area of demand. So let's see what prices are doing here. You can see that there's a wick break above, but that doesn't really give me any signs of assurance that prices should intend to go up. There we go. We have a break of structure to the downside. We can see now that there is a low and a high happening here. We can see that there's a high, a low, and another high, and another low, right? So we can see that the intention of this market right now, price wants to push bearish. So are we able to catch this next bearish move? Let's go in and find out, okay? So far we see that we have a high and a low, a high and a low, and now we need to be able to, look to see if prices have been mitigating here. They haven't fully mitigated, so we're going to wait patiently for this. Let's go back here. Let me just do this. Supply, mark out supplies. Okay, there we go. We can also see again, though, that we did break structure here. you can see that there was a structure break below and another structure, okay? So we can adapt to this move here to push bearish. So instead, I'm going to have two supply zones here. There's an order block there, but I'm more curious about this wick here because this order block here, this wick here has more data in it than the order block here itself. Okay, so notice what's happening here. We had a tap, right? We had where price blew right through our high here, so we need to be aware that prices are obviously bearish here. Okay, and we can look to take a snipe from this area here and have a risk right above, right, targeting this low. Let's see what happens here. If prices break above, then we know why. Okay, so here's what happened. Okay, so we can see that our high was broken, right? And obviously I can't go on a lower time frame to see more data, but we were just blown right through it, which is totally fine, right? We're just showing this as an example, obviously. Prices just broke right through the low, I'm sorry, right through the high. You can see that we did have liquidity on the lows down here as well, which I didn't pay attention to. You can also see that there's more liquidity right here. Prices are breaking right above. Now we're looking for prices to tap that supply level. Let's do it right here, okay? And from this supply level, we're looking for price to go bearish. Okay, I went a little too fast here. Once prices went bearish here, you can see that prices did not tap our supply. They just broke right through it. Although in retrospect, I was also looking for a buy here, but things are too fast, way too fast, right? Too big and too fast. You can see how the candles are too big here, and they're obviously taking out liquidity fast and from the lows and taking liquidity from the highs. So prices are pushing bullish from here. Okay, just about. Okay, so here's where I'm talking about adapting to the market. Okay, so let me just zoom out and go back to the 4 hour. Okay, you can see that the 4 hour is being respected. Okay, we did have a break of structure on the downside here, excuse me. Okay, and we can still look for a sell off from here. Okay, but we need for prices to shift here because prices haven't shifted just yet. Okay, there we go. We had this low being respected here. We're still looking for prices to change bearish because they haven't done so yet. Okay, notice how we're still ranging, everything's ranging. Okay, nothing looks good here, so we're avoiding prices here, and prices are just going entirely bullish here. Okay, so notice how we saved ourselves from taking bad trades, right? You can now see, if I zoom out, you can see there's a low, there's a high, there's a low, and a high, right? Now let's go, and without me showing you too much information in terms of detail out here, I'm just going to show you guys how structure works, okay? Simply, notice there's a low, there's a high, there's a low, there's a high. Let's just expect that prices should go bullish here based off of how, based off of structure, okay? So you can see how prices did go bullish here. We have another break of structure here. We're anticipating for another buy. The next buy we anticipate is for price to come all the way back down here, okay? If that doesn't happen, we can adjust to and adapt to the new structure. You can see there's more structure here, okay? You can see there's more structure here, okay? In the long run, we know that this high here is way too high in pricing, okay? So it'd be too expensive for us to buy, but that doesn't mean that prices will not go up from here. As you can see here, I'm just showing you guys how structure is working. There was a reaction on the 4 hour here. If we cut this out right here, okay, look here on the 1 hour. Okay, we did have this. We had a low, we had a high. You can see that here was our order block right there. Prices reacted at that low, prices pushed up, right? And then you could have targeted your high or targeted your supply here. Okay, let's continue, okay? So we know where that next area of supply is. It's potentially this area, potentially this zone or this zone, okay? Let's continue watching this. We're looking to target the extreme low. Okay, there we go. So we would avoid this one, obviously. You can see from this low to this high, where that 50% equilibrium line is, it's right here. Prices went right through it. It disrespected this area because this low here had data, this wick had data that prices did actually touch. It stalled for a bit, right? it stalled for a little bit and it dropped below. Why, you may ask? Well, if you see here, there's liquidity. Okay, there's liquidity that the price was creating to take and to go, right? Prices always happen at the extreme lows and extreme highs, just based off of structure. So notice, just because we knew structure, we noticed how price was working here. There was a low, there's a high, okay? Now we anticipate for prices to break this extreme high. If it didn't break, we're going to adapt to, well, we're going to wait for prices to break, right? We're not going to be looking for sells right now because prices are at a range right now. We're looking for prices to give us a confirmation to say that it's going back up, okay? Now that prices are shifting slowly, we can slowly look for our minor structure to take over our substructure and tag and target this area of supply. Okay, so let's look at that. We have a high here, sorry, a low and a high. And what are we doing? We're waiting for this high to go first. Here we go, okay? Now let's look at this carefully. Oh, we have a high, we have a low, we have a high, we have a low and a high, okay? We're looking for this area here for prices to come and tap. If they don't, and they do whatever, you know, we're looking for buys there, right? There you go, right? Now, why did this work? Well, it's because it's structure. Highs and lows, highs and lows, highs and lows. Nothing new. Nothing new here, right? I'm not looking for sells here only because prices are, in fact, pushing bullish on a long term, right? On a long run. You can see here, there's a low, there's a high. Everything is bullish here. So we shouldn't be looking for sells at all. Okay, let's do it again. Okay, so now prices are going bullish here. All right, we have a high broken here, so we're anticipating for price to go bearish here and go bullish like this. If prices, let me just get a better drawing tool here. If prices just retrace like this and start pushing bullish, then we're going to start adapting to these areas to have prices push bullish. Okay, watch very carefully. Let's see what happens. Okay, I'm going to play it a little quick here. Okay, notice prices, or this is still early to know if prices are going to be pushing bullish, but notice how prices are just stalling here. Okay, my intention here is to look for buys. Although we can actually take advantage of this. We can say that there is a break of structure because there is a break of structure. Let's go here and map out our structure. Okay, there's a high, there's a low, there's a high, there's a low, there's a high, there's a low, here's our high, and here's a low. Now, what do we have here? We have a clean break of structure, right? Now, when there's a clean break of structure that happens, right, we wait for prices to come back bearish like this. We're looking for them to mitigate our last low, and then we're going to drop down to our lower time frame. Now, since I'm on the 4 hour, I generally can't go even further down because we're going to lose some. We're going to lose some data. Anyway, okay, so here it is. You can see what happened here. Even though price broke bullish here. And we know the intention why price didn't continue up, right? First of all, if we go on the 4 hour, you can see that price broke with a wick, right? Didn't break with a full body close above. Second, we're actually looking for buys at a premium area, which is not a good area to look for buys. But I'm telling you guys this, in all honesty, that it doesn't matter where you look for buys or sells. In most cases, it doesn't matter to buy and sell at certain areas, only because prices can do whatever they want, right? Our intention as traders, and the intention of the market is we wait for prices to retrace fully deep back like this. That's where we want prices to come, right? But there are in most cases too where prices do not come all the way back here, let alone into the discount area and go up, right? They just stall here and push bullish, right? That's what I want to show you guys here, right? Notice how we came into the discount area. We can still anticipate and wait for prices to break bullish. If they do so, we're going to drop in the lower time frames and look for buys like this. Okay, so let's see what happens. Okay, price is still breaking bearish. We can look for sells on the lower time frame if we want, but notice what's happening here. We have structure here. We're just going to be following structure. Okay, price is wicked above the high. It did go bearish just by a little bit, like this. Let me show you on a lower time frame what it would look like, right? So there's our area of supply right there. It's not too important to really look at this, but I'm really just wanting to show you guys how structure works, okay? Okay, so we know that this is our high here. Prices are being broken. ever so slightly. They haven't fully broken yet. We're looking for that break of structure. Here, that is our high, this is our low. So we're in this range right now. Where is price going? Okay, price went bearish. Okay, so if we were ready, we could look for sells here, obviously. We have a high and a low here. Okay, prices have broken. This is our next high. Now we're still anticipating for prices to go bullish here based off of this low. Okay, and this here is essentially just liquidity. It could be liquidity for price to come even further down to tap and push bullish, right? But I just want you guys to see generically how markets work. Okay, look at that, right? So you'll be asking yourself, well, why did price go up, right? Well, that's because if you zoom out, notice how we've mapped out our structure. We have a low, high, low, high, low, high, right? It's no secret, right? It's easy. Here you can see that prices have broken bullish here, so our expectancy is to look for a buy here still. Okay, we're still in an uptrend. Let's go here. There we go. There we go. So there we go. This low here was supported and it pushed up. Why? Because our major structure has been respected here. This low respected this low, right? So structure just shifted, pushed bullish, and started going up. Okay, follow your lows and your highs, guys. It's as simple as that. Okay, now let's adapt to this market. This is what I'm talking about. Watch this very carefully. All right, from this low to this high, like this, from this low to this high, we are anticipating for prices to come back. If this low hasn't been tapped, what do? We start adapting to it. There's a break of structure there. Okay, now we want to adapt to this structure, and we want to be taking advantage of this to look for more buys. Notice what's happening. There's your low, right? What is that? There's a buy right there. Okay, there we go. See what I'm telling you guys? Just adapt to it. Your break of structure. Every time you see a break of structure, adapt to it. Now we know we're very high in price on a higher time frame structure, right? Only because if you see this low to this high, we're so high in price. We're in premium right now. We need to be in discount, obviously, to be buying. But don't be afraid to look for structure. When structure breaks, when you identify structure is structure at the end of the day. Okay, low, high, low, low, high. We're waiting for prices to come bearish here for us to look for buys. If they haven't done so, then we're going to adapt at the new high. Okay, there we go. All right, so we notice that we know intentionally that price is very high at this point. You can see that price didn't work out for us. If we drop down to our 30-minute time frame, you can see that price didn't play out so well. You would wait for a break of structure from this high here to go like this, right? You would wait for prices to do a chalk like this, and then go continue to the upside, right? Creating new structure. That's all it is. Let's go back to the 4-hour time frame. Let's go map out the new structure here. You can see there's a low, high, low, high, low, high, low. Okay. Now prices can continue from here, or they can continue to go bearish like this. Then we'll have two structures that we're two structures that we're looking to work with. Okay. So here's this last example. Okay, there we go. See, guys, see how easy that is, right? So you can see how structure is just compounding with each other. It just compounds, right? We can still see from this low to this high that we're still high in the premium area, right? In the premium level, we're still high in price. Price hasn't pulled back yet. The 4-hour hasn't changed yet. It hasn't. The market hasn't come all the way down to our area of demand just yet. But we still took advantage of knowing where our structure is, our highs and our lows and our highs and lows, or lows, highs, and lows and highs, right? We knew this was the potential area where price was going to be next for that next buy. Then you could scale down to the lower time frame, look for your potential, your break of structure, right? Like right here, you can see your high or low, high, low. You can see this was broken, right? Here's your flip. You can see now you can follow your lows and highs from here. You can see here, low, high. Let me make this a little more clear for you all. Low, high, low, high, low, high, right? Low, high. I can go on and on and on about this, right? And then when prices go bearish like this, now you can see that there's a low, there's a high, there's a low, and a high, right? Like this. You see? it's just seeing structure very easily, very carefully in the market. Don't try and over confuse yourself in the markets, because because there's so much distractions in the market in terms of noise. There's so much noise. Make it easier and simplify structure first, because structure above all is king, guys. I really hope you guys understand this video. I have to end this video right now because it's way too long. I hope you guys really understand everything. If you did not, please leave some comments on the low. Please let me know if you like this video or not. Obviously, please let me know if we did a good job on this video. And please, 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 I really beg of you guys to throw a nice thumbs up on this video, because obviously we're giving free content all the time, every day, guys. Every week, I'm sorry. And without any further ado, guys, I will see you next. Boom.